Good afternoon, everyone. Welcome to our webcast on getting started with stock investing. I'm Connie Hill with Schwab Coaching. Happy you've joined me here today. Are you somebody that is pretty new to the markets? Like you might be feeling like you're a brand new baby as far as the markets go. Well, you're in the right place, especially for this series and for today's session. Today, we're going to talk about some of the basics of investing that maybe you've heard some of the terms and the words, but you're not really sure what they mean. We're going to set a foundation for you here today that we're going to build on in the next several weeks. Now, I am joined in the chat by Lee Boll. Lee is a fellow coach and friend. He has such great depth of knowledge as far as the markets go. So as you have questions, throw them out. Okay, don't be intimidated. I'll help you out, or Lee will help you out. And we want to make sure you get your questions answered. Those of you that are listening to this on the archive, like so many of you do, if you have a question, you put your question in the comments section on YouTube. And I'll go back and review those throughout the week. Make sure you get your question answered here as well. Well, let's get started with some disclosures before we get too deep into anything here. What we talk about today is intended for general information and for educational purposes only. We're going to refer to some different stock ticker symbols, but they shouldn't be considered a recommendation of any sort. We will talk a teeny bit about technical analysis, but Schwab does not recommend the use of solely technical analysis for your decisions. We will be using the Thinkorswim Paper Money software application today. It's very robust software. If you're new to the Thinkorswim software, I'll try to explain some things as we go, but it's a fantastic tool for you to learn to trade from. We won't take into consideration any commissions or other transaction fees as we talk about potential trades. Keep in mind, the markets involve risk, including the risk of loss. Just be aware of that. So our agenda today, we're going to talk about different terms, talk about different investing styles. When we talk about terms, we're going to look at some different things that are going to be kind of thrown out there that kind of people assume that you know and you understand, and as a new investor you might not be aware of what some of these things mean. And then we're going to be looking at some online resources, including those on the Thinkorswim platform. In fact, I'm going to go back and forth with those, and so if you do have your Thinkorswim open and you want to follow along, go ahead and do so. Now, one thing I do want to mention before we get too far into things is that I am on X. And I'll post different things throughout the week, things that I find interesting that I think you might like. Lee Boll does the same, and so you want to make sure you're following us. Lee is Lee Boll, Bohl, CS, and I am Connie Hill, CS. And make sure you get in on all those little tidbits that we throw out there as coaches. Don't shortchange yourself. All right. Let's talk a little bit about investing styles to begin with, because you're going to hear some of these terms referred to, okay? So one term you're going to hear is called a value investing or value investor, okay? The idea with value of investing is that maybe you're looking at a stock. And as you look at that stock, you think, man, I've run some numbers. I think this stock actually is very underpriced, and I think its potential value or its intrinsic value is much higher than where it's trading at today. And so you kind of feel like the stock is a bit of a bargain. Maybe it's been beaten up, but still has some sound fundamentals and sound product lines and so forth. And so that's how some investors approach it, and they buy with the idea that they're going to hold on for a longer period of time. They're not planning on jumping in and out, but they're going to give that stock time to appreciate to where they think it really should be valued. Now we have another style. It is called growth investing. We'll talk about it quite a bit in our series here. The idea with growth investing is that you expect the future price of the stock to grow at a pretty decent rate, something above average. You don't necessarily think you're buying at a bargain like value investing. Sometimes you might buy a little bit higher and expect it to go higher. All right. And then we have what's called income investing. And income investing is a strategy where you purchase the stock. You might be hoping for some appreciation in the stock value, but not necessarily as much as, say, a growth stock. what you're counting on is that the stock pays a dividend. Just for you as a shareholder, you receive some sort of payment from the company on a frequent basis. Many times that's quarterly. Sometimes it can be semi-annually or annually. Or there's a few of them that are monthly, but the most common one is quarterly. And so as a shareholder, that is how the company rewards you, is by paying you this dividend. And so you might expect that as part of your return as far as that investing style. Now, I want to show you a couple of examples of maybe some stocks that might fall in this category. You might be familiar with some of these names, and some of them you might not be familiar with at all. So I'm going to jump over here. I'm going to go to my Thinkorswim platform. And the first stock we're going to look at is ticker symbol FMC. Now, you might not have ever heard of FMC, and that's okay. Those of you that might not be familiar with the chart, let me just point out a couple of basics in our chart here. What you need to know is that down here at the bottom is a date. All right, and so we can see over here on the left, it's about 6 months ago. And then over here to the right is the most current information. As we look at this chart, we can kind of see a pattern. We can see, does it look like it's going down in price? Does it look like it's going up in price? I'm going to zoom in just a little bit closer here. Each one of these diagrams that you see here that's red or green, we call those candles. This is a candle chart. There are other types of charts we might refer to, but it's going to show us the day's price activity. So I'm going to pick on this little candle here that's kind of bigger compared to the rest, all right? And if it's green on a given day, that means it closed higher than where it opened. If it's red on a given day, you know, these couple of red candles, it means they closed lower than where they opened. And then we're going to see some parts of the candle that are sometimes really visible and sometimes they're not even present. But say like here at the top of this green candle, that is showing how high the price of the stock went above the opening price. And then we can just see kind of a little stub here down on the bottom. That's showing us how low the price of the stock went on a given day. And in this case, it didn't go much lower than where its lowest price was. Okay. Over here on the side, you're going to see some price. And on this price, we have a scale. So we can see it's up here at 77.50, down here at 47.50. And that kind of is the range for where we've zoomed in on the price action right here. Now, getting back to this idea of investing styles, this stock you can see, and maybe even if I go to, say, a one-year chart, you can see this even better. This stock has been doing what? It's been going down, 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 down. Now, recently, it's kind of found a leveling out point around $50 or so. And so maybe it's starting to stabilize, but there could be some investors that think, if I go through and crunch some numbers, I might think this stock is worth more than what it's actually pricing at right now. Had a period of time where it pulled back. You might want to investigate the reason. But that might be an example of a value stock. Now let's take a look at what might be considered a growth stock. Okay, I'm going to pull up a ticker symbol, CAVA. This is a stock. It's actually fairly new. It hasn't been around for a long period of time. Its first trading was in June this past year, so it hasn't been around all that long. And the expectation with this particular stock is that the price is going to go higher. It did have a high here about 58, and it pulled back here to about 29, almost half the price shortly after it went public. But what is it doing now? Right now, it's following a pattern of higher highs and higher lows. And it looks like, all right, it looks like maybe that stock is back on track. And the expectation with it is perhaps that it'll continue to go up. That might be the expectation. Now, an income stock. That's a stock that somebody might hold on to for the dividends. Now, I'm going to bring up a stock here. It's a mature stock. Get the right letters in there. Amgen. You probably have heard of Amgen before, right? Pharmaceutical stock. There we go. It's a stock that's been around for a long period of time, all right? But Right now, it is trending up, which is nice if somebody's holding the stock, right, for the price of the stock to appreciate up. But it also pays a dividend. Now I'm going to zoom in on our chart here, and I'm going to point out an icon that's on the chart that is this green circle with the dollar in the middle, and that lets us know a dividend was paid on that day. It also, in little tiny letters, it'll show up better when you're looking at your own chart versus mine. What you're going to notice is a value, and the value above that little dollar sign says 213, and that's how much of a dividend was paid on this date, which was back on August 17th. Okay, this stock, somebody that's maybe invested in the stock is really looking for that appreciation of the dividend or the consistency of receiving that dividend payment. And if I back out here a little bit, we can see, it paid $2.13 in November as well. And we could go back in time and just kind of see what the consistency of that is. Some of these stocks might be lower priced. Some of them might be higher priced. Many of them might be known names. They're kind of mature stocks. They're not necessarily in their growth mode anymore, but that might be how some investors use it. All right, let's go back here. Jump back to our slides. Let's talk about some basics about what actually is stock, okay? Stock is when you have partial ownership in a company. They may issue some shares that are traded on an exchange, and you can go in and you can buy however many shares you're interested in, okay? And when you do that, then you have partial ownership in the company, and you're entitled to what the company does. You're entitled to the price of the stock going up, or if a company pays a dividend, you're entitled to that as well. And there's two typical ways that we might consider about how to make money if you were to buy a stock. All right, so the first one is stock appreciation, which we've talked about, that it goes higher than where you bought it at. Okay, that's what we're looking forward to. We talked about in the investing style, maybe you might get rewarded because it pays a dividend to you on dividend paying stocks. Now, how do you lose money on a stock? Is that possible? It absolutely is, okay? You lose money when the stock price drops. All right, now the stock is going to waver, right? It's going to go up and down and up and down every single day and throughout the day. It seems like the price is constantly changing. Okay, so we're going to be looking over, various periods of time and not micromanaging it from minute to minute to minute in a trading day. But if the value continues to go down, that's when you start losing money in that asset. Now, if you are counting on the company to pay you a dividend, companies aren't required to pay a dividend. Some of them like to keep paying a dividend. They want to keep their reputation up of paying the dividend and being very steady and loyal to their shareholders. And some of them may express a pattern of increasing the dividend over a particular period of time. And they kind of respect themselves for doing so and like to do that. But they don't have to pay you. They could discontinue paying the dividend, or they could decrease the value of the dividend at any given time. All right, so just kind of keep those ideas in mind. I'm going to come back. I'm going to check the chat area here to see if there are any questions. Lee is mentioning something which I'm happy that he pointed out, and that is subscribing. Okay, you can subscribe to our Trader Talks channel where you can see all the different classes, what's coming up, and so forth. And when you subscribe, it also makes it a little easier for you to find those classes. I'm going to take a short detour here, and I'm going to show you what Lee's helping me promote here. And what I'm going to do is I'm going to go over to YouTube, right? That's where we broadcast our webcast from. This is our Trader Talks channel. When you select on that little icon, you become a subscriber to the channel. And so this is what you're going to see when you go into it. You'll see some of our coaches up here. These will rotate every few weeks or so, letting you see the faces of different coaches that are here. But then really we scroll down here and we could see some things that might be interesting to us. Like these are classes that were just taught in the last couple of days that you might be interested in. Then we have what's going to be coming up next. So this is part of our Monday lineup. And then we have some different sections depending on what you're looking for. So many of you, this is a beginner class that we're talking about here. You might be a beginning investor, but you might be an experienced investor, but you're new to the Thinkorswim platform. And so getting started with Thinkorswim and exploring Thinkorswim will be classes that are going to help you out. All right, so as you subscribe to the channel, you'll be able to get that kind of a look. The other thing you can do here is you can select on playlist. And playlist is basically the archives of those classes. So for example, if you want to join Lee's class that he teaches during the week, Lee, you might have to remind me what day this was. I think this was yesterday's class. Actually, Lee might not have been in this one, but it was with Street Smart Edge, for those of you that are coming from Street Smart Edge to using Thinkorswim. As far as futures go, that was an excellent class. In fact, I got to sit in on that for a little bit. So each of the classes will have their own playlist that you can go specifically to it. For example, if you want to learn the basics of Thinkorswim Web, Brent's got 10 videos here that he's done. They're very short, they're very handy, concise, get you to the point. All right, so that is what you have to look forward to when you become a subscriber. All right, let's jump on back here. And let's talk about earnings. Now, earnings is a period of time when companies are required to report financial information. Sometimes they just file the reports. You can go look for them. Many times they want their investing public, their shareholders and everybody to be able to see how they did that quarter. And so there are three main reports that they release: an income statement, a balance sheet, and what's called a cash flow statement. Now, you don't have to be an accounting major to be able to understand these sheets, but or statements rather, but just know the income statement basically is going to say where their inflows of cash have been and where their expenses have gone and what's left at the end of the day. Balance sheet shows the difference between assets, liabilities, and capital, what do we call that section? Not capital gains, but capital ownership. Okay. And then we have the cash flow statement that shows where did the money come from, where did the money go to that the company spent. So really important information. But again, you don't have to be an accounting major to review them. And if you want, you don't even have to review them, but they are available so that you know. Now, many companies will have a conference call. After they release the information, or at the same time they release the information, they'll have a conference call. Typically, they have their dog and pony show that they're going to tell you what they want you to know about it. And then many times, many analysts will ask questions of the company about those financial statements. That's why sometimes they give them a little bit of time to digest the information. Now, when these earnings period come out, stocks can be a little bit volatile and they can move very sharply in relationship to whatever it was they said on these reports, on these earnings reports. We have what's called earnings season. Earnings season is where the majority of stocks within a 6-week period of time report their earnings. Guess what? We're starting at the beginning part of earnings season. It kind of kicked off last week with some of the big banks reporting how their earnings went for the last quarter. And we have today has been the first, or this week has been the first full week of earnings, and we're going to go through that for the next 5 weeks. It typically is that there are always some companies reporting, but the bulk of them are going to do it in the next 6 weeks. Let me take a quick look at our chat here. Hey, Wiley, I appreciate you sharing that information. The online courses help reduce the learning curve. Man, they are there to assist. Absolutely. Let's see. Sabrina says, can you please explain some exit strategies to make profit while placing a trade? Now, Sabrina, that's probably going to be beyond the scope of what we're going to talk about specifically here today, but I do want to do an example trade in every one of our classes. When we do the example trade, I'll talk about that a little bit, okay, and give you some ideas there of what that might look like. Now, earnings. Told you we're in the thick of it. Next week on Tuesday in particular are going to be some names you probably know. Johnson & Johnson are going to report, Procter & Gamble, Verizon, GE. Now, all 4 of those happen to pay dividends, typically. Doesn't mean they're guaranteed to, but they typically pay dividends. Another big company that's going to be reporting next week is going to be Netflix. Now, they typically don't pay a dividend, okay? They are still considered a growth stock, okay? So those are some names, and I bet you next week on Tuesday, you're going to hear a bunch of information specifically about some of those companies. All right, next up, get rid of the green dot, then we'll go, there we go. Dividends. We talked a little bit about dividends, right? And dividends are essentially money that is paid to the stockholder. You can choose to just receive the dividend. Some people will do that, and it's like some folks in retirement, for example, and you don't have to be in retirement. Some folks in retirement put money in stocks that pay a dividend, and they count on that dividend coming in every whatever it is, every quarter, every month, whatever it happens to be. They're considering that part of their income from holding those shares of the stock. That's how they plan to use that. Now, companies that offer dividends do so to attract different types of investors, and that's how they reward them. They're not typically growth companies anymore. Okay, doesn't mean they can't grow, because it would be ideal if they did continue to grow and they paid you a dividend. Okay, that's what a lot of shareholders might be looking for. Usually they're larger, well-known companies that offer dividends. And again, they're not guaranteed. And some of the big stocks that you may have heard of that do pay dividends, or some of those that I mentioned, are going to report next Tuesday: Johnson & Johnson, Procter & Gamble, Netflix, Verizon, and GE. Now let's talk about news. News is one of those things that can cause the stock to move. Okay, if a stock doesn't have a lot of news, sometimes you'll notice the price just kind of sits there and trades in a little range, doesn't do a whole lot. Boom, news comes along, and what does that do? Man, it lights a spark under it, and typically, depending on if it's good news or bad news, causes it to move one direction or the other. Sometimes people might read a piece of news and go, how do I know if this is good news or not? All right. One way that you can tell is, how did the market react to it? Was the market happy about it and the price went up? Or did that stock sell off based on that news? Now, there's specific news like corporate news, like earnings that we talked about. Another thing might be a stock split. Okay, you might go, I've never heard of a stock split. But basically, it's just a reallocation of how the shares are divvied out. If a stock or a company goes through a stock split, you're not going to be at a disadvantage, or the value of what you own is still going to be what you own. But let's say a stock's been running up in price and they decide to do what's called a 2-for-1 stock split. That means for every one share of stock you own, you will now own 2 shares, but the value of that share is going to be divided in half. Okay, so even though you have 2 times the number of shares, the value is half of what it was. But many times this is seen as a bullish thing for a company to do so. They don't typically split their stock like in a 2-to-1 or 3-to-1 ratio unless they think it's going to go up again. There can be reverse splits that occur. In fact, I think we talked about that a couple of weeks ago in one of our classes, with a stock that maybe was floundering, wasn't doing so well, and so they did the opposite type of allocation. In fact, I think it was for every 10 shares of stock you had, they took you down to 1 share, but the price of the stock was 10 times greater than what the value was pre-split. Okay. Other types of corporate actions we've talked about: dividend payments, mergers and acquisitions. Man, that can really make a stock move. Sometimes you've heard buy on rumors, sell on news. Sometimes those rumors will come out that there's going to be a merger or a takeover. Sometimes stocks will really move big on that kind of a news. If a company is going to spin off part of their company, maybe it trades publicly or privately, that can cause some movement. And then there's general things that happen in the market. And I'll tell you, when I was a newer investor, I didn't pay as much attention to this aspect of the news that later I learned, oh man, you need to pay attention to that. All right. So that could be things that occur just in the general marketplace, things that happen maybe sector specific or industry group specific. So for example, something that's been very big in the news, say the last two years, really prominently, is what the FOMC does with federal fund rates, right? That our interest rates are tied to. What have they been doing? They've been creeping up, right? So that's big news, and sometimes that affects some businesses positively and other businesses negatively. Things like government reports that come out, like unemployment rates, which are typically on Thursdays and Fridays, we get some of that information. Inflation rates, retail sales of different organizations. Those are the types of news that really can jump out. Now I'm going to pop over here and see if there's some questions I need to answer here. Looks like we might be in good shape. And Jody is wondering about maybe a ticker symbol on the Thinkorswim charts and the earnings call. I'll point that out to you here in just a minute. All right, next up, indices. What are indices? Well, a single one is called an index. You probably have heard, maybe some of those popular indexes might be something like the S&P 500. The S&P 500 is 500 individual, some of the bigger companies that trade. They represent a variety of different industry groups, and that index is, people have a tendency to see it as a gauge for the overall market, okay, because it is so representative of so many different types of stocks, different sectors and industries. Now, the S&P, I should say, every index has a different way that they are weighted, okay? So the S&P 500 index is weighted by market capitalization. What is market capitalization? Basically, it's the value of the company. It's the number of shares that a company has that are outstanding, and you multiply that by the price of the stock. So you can imagine if the price of a stock continues to go up, 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 yeah, the value of what it does on the index is going to increase, and its market cap is going to increase. So bottom bullet point here, it says companies with the largest total market value have the greatest impact on the S&P 500. Maybe some of you over the last year have heard of the Magnificent Seven, which were the 7 most weighted stocks on the S&P 500, and they were doing a lot of the moving of that index. One of the things that happened, I'm trying to remember when it was, I'm going to say within the last 4 months, maybe a little bit outside of that range, the S&P did a reweighting so that it was not so heavily dominated by that Magnificent 7 stocks. Now, the Dow Jones Industrial Average is 30 industrial stocks. They're very large companies, but there are only 30 of them. Yes, they're diversified. This is a price-weighted index, which means the value of the stock becomes very important. So if a stock's value decreases, its input in the Dow Jones becomes more minimal and minimal. And sometimes they'll swap out some of those companies if they're ones that just really aren't doing a whole lot right now. 2 other indexes you've heard of, the NASDAQ, probably one that has more technology-based stocks in it. Things like companies like Apple, Amazon, Microsoft, Alphabet, common household names of technology stocks that you've heard of trade on the NASDAQ. And it is a separate index, and the Russell 2000 are the smallest 2,000 what we call small cap stocks. Okay, sometimes they're names you haven't heard of a whole lot. Maybe they're new to, maybe they are even creating their own niche in the market as far as what they do. Sometimes you'll never hear of these companies, but it's kind of nice to find them when they're little. Even though the Russell 2000, it started initially with 2,000 stocks, I don't think there's nearly that many stocks on that index right now. Now, I want to jump over to Thinkorswim, and I want to show you some examples of what we've been talking about here, how you can see that being represented. Let's jump back here, and I'm going to pull up some of these indexes. All right, so you might want to jot these down if you're not familiar with them. SPX is the S&P 500. That's what I have on my chart right now. Again, we're looking at just kind of a 6-month chart, so you see something recent, but what happened today hit a new high. The NASDAQ as well, and I'm going to pull it up by COM, might be $COMP. Let me get the right one. Indeed, the NASDAQ composite, brand new all-time high, 15,310 and change is what it went up to today. Both of those being very bullish right now. Let's see, the Dow Jones is typically $DJI. Okay, if you want to pull up that index, see what it is. Some people will even make little watch lists and they'll put in some of their favorite indexes just to give them a gauge of the market. Well, it looks like the Dow Jones closed at a high here as well, 37,933. That might not be an all-time high, but it's going to be pretty close. And then the Russell 2000, its abbreviation, its ticker symbol is RUT. All right, so it has, we can see today, it's down here. It had a peak back in December. In fact, had a big rally back in December. It's pulled back a little bit here in the new year. So we can kind of see what's going on. Is it increasing in value? Is it decreasing in value? And when we see what the indexes are doing, right, they're the compilation of different types of companies, gives us a feel for, is the market bullish, meaning going up? Is it bearish, meaning going down? Now, another way that we can look at these indexes, I love this tool on the Thinkorswim platform. It's called the heat map. You're going to find it by going under Market Watch, and click on that tab. And then over here on the far left-hand side are some different lists. Some of them Thinkorswim has created for us. We don't have to do anything to adjust them. They take care of that for us. Or you can do your own personal lists. Now, I started this out here, and let me maybe just kind of show you right here. I clicked on the Dow Jones. I wanted to see the 30 stocks that were in the Dow Jones Industrial Average. We see all 30 of those ticker symbols, but one thing you're going to notice is that Microsoft and Apple, their squares are pretty big versus, say, Travelers, that's kind of small, versus Triple M, it's a little bit small. Okay, so as far as that index goes, those smaller blocks or smaller market cap companies, Microsoft, Apple, they are larger cap companies. In fact, we might call Microsoft and Apple mega cap stocks. They're really, really big. Now, if you want to know maybe the market cap of some of these companies, you can come and put your mouse in the square here. The greener the square is, the more up it was today. So like Travelers is pretty bright green. It was up 6.72% today. If it was red or some shade of red, then it means it was down today. And the redder it is, the more down it was. I'm going to say UNH is probably the most red today. Looks like it was down 2.48%. And so you can just pretty easily, just by moving your mouse around, get that kind of data about the stocks on the index. Now you're going to notice there's the NASDAQ 100 here as well. Russell 2000. Now I challenge you to count and see if there really are 2,000 of those stocks in there. But it kind of, on a daily basis, it's just kind of fun to go look at it, see what the indexers are doing. Are they mostly green? Are they mostly red? Well, if they're mostly green, what area are they mostly green, and so forth. And I mentioned you can do this, have a heat map for your own personal watch list. So I'm going to bring up one of my personal watch lists here, and I'm just going to pick this one that says, oh, that's not very big. This one's bigger, favorites. I think this is a default favorites in your paper money account. And so you can see, yeah, some of these are bigger, some are smaller. Most today were green. We saw we ended up on a pretty bullish day in the market here today. Okay, so really helpful to give yourself a gauge of what's going on in the index when you look at the chart, and then coming over to the heat map and seeing what companies created this type of movement here today. So CVH asks, is the heat map based on volume or on dollars? It's not based on volume, but it is based on market cap of the stocks. Okay, so here's Bank of America. It's a pretty large stock represented in that watch list. But if I go back to, say, let's go to the S&P 500. All right, each of these squares, the bigger the square, the bigger the market cap of the company that they represent. Yeah, so Lee's letting us know that there as well. Appreciate that, Lee. Okay, now let's look at something else that you want to be familiar with. And in fact, we're going to spend a whole lesson. Oops, get the right one. We're going to spend a whole lesson on that. It's called top-down analysis. And really, it has to do with breaking down the market. Market, at its biggest point, we have the markets on top, which you might think of as maybe groupings of those different indices, but it's basically all the stocks there are on the US exchanges that you can trade. Then it's broken down to the next level down, and we refer to that as the sector level, right? Bank of America, what sector is it in? Financial, right? Chevron, what sector might it be in? Well, that's going to be in oil and energy. All right. And so each stock is going to most likely belong to one of the sectors. And then the next level down gets a little bit more specific, and that is the industry groups. And there may be, say, 5 different industries that roll up into one sector. There are some sectors that maybe don't have a big breakdown of industry groups, like real estate. And then there'll be other ones like oil and energy that have a lot of industry groups. And then they may even have what are called sub-industry groups below that until you kind of drill down to the stock level here. Now, listed are each of the 11 sectors here. And just knowing that layout of the market can be really helpful. Now, I'm going to go back here. We're going to go back to our Thinkorswim. We're going to take one stock. And the stock that I am going to choose here is going to be off the Dow Jones Industrial Average. We are going to use this smaller stock with a bright green box on it today. We're going to choose Travelers Companies. Okay, that's the stock we're going to look at. Now, if I go ahead and I click on charts and I put in the ticker symbol TRV, it's going to bring up the stock for us. And I told you it was bright green on the heat map. And as we kind of look at it, I'm just going to zoom in here about what happened today. Look at this. It's been going up overall, a pattern of higher highs and higher highs. Would call that an upward trend. And then today, man, look, that was a big move. Why did they have a big move? You might want to ask that question of yourself when you see something like that going on. Well, gee, look at this. They had their earnings report. They had that specific news that we talked about. That red circle with the telephone in it means the conference call. The blue circle with it looks like a light bulb. Some people might think it looks like a cartoonish exclamation point. I kind of think of it as a light bulb, but it's basically the icon that lets us know they have earnings. All right, and you can put your mouse on top of, let's get it to balloon out here. Let's try this again. There we go. If I put my mouse on the earnings icon, because the earnings news is out, then it shows us that information. It tells you essentially what their earnings were, what the date was, and then the conference call. It tells you what time that conference call is going to be, which was at 8 a.m. this morning. Okay, so when they had that call, can you join in on those calls? Absolutely, you can join in on those calls. That's not a problem. Now, suppose you didn't know what Travelers was, and you were interested in maybe researching that company a little bit. We could easily do so. I'm going to take you to another tool here. We're going to go to the Analyze tab. And then where we're going here is on this one called Fundamentals. That essentially is going to give us some fundamental information about this company. Now, this is a little hard to see, but I'm going to put that green square around it. Financials, that tells you what sector Travelers belongs to. Maybe you've never heard of them before. That would be helpful for you to know. Gives you a little mini chart here over the last 5 years, what the company's been doing. And then over here, we see kind of a, I'm going to put a square around this. What we're seeing is analyst information. Analysts have different verbiage to say if they're happy or keen on the stock, they think you should own it or add to your position in it or add it to your portfolio, or if they think, if you have it, hold it, or if you don't like it, or if they don't like it, they may say, avoid this stock, or they think the stock is trouble, you should sell the stock, right? So they have a little bit different lingo here, but we can see reports from several of them And if you want to download that report, you can. Then there's a little paragraph about what the company does. And then if you do want to drill into those financial statements we talked about, income statement, balance sheet, we have got this little section here by the numbers. You can look at it on a quarterly basis. You can select on this tab next to it and select annual, and you'll get to see many years of representation here. All right, it goes through some of the key ratios that people might be looking for. Now, as we go down to the bottom, it gives you some information about the stock. And so if you're really wanting to drill into details, this is a great summarization that you can do that. And then down here is this nice little spot down here. Talks about, where's the money? How is it made up in this company? So apparently 70% is based on business insurance. Bond and special insurance is 25%. So that's kind of the lion's share of where the revenue comes from. And then they've got a couple of other divisions down there that make less than 5% of the earnings for the stock. Okay, there's additional information here, but I wanted to just kind of expose you to that. Now, I told you I wanted to do a trade in all of our classes. We're going to circle back, and there's a couple questions that we need to answer. One was Sabrina's question about explaining exit strategies. We'll talk about that a little bit. And then there was another one in here. Can't remember which one it was. Let me scroll up and see if it jumps out at me. And if it was yours and I told you I would answer it later, would you mind just copy and paste it over to me again? Now, there's a lot of different ways you can purchase stock off the Thinkorswim platform. We could even come up here on the page we're on the fundamentals, and I could hit the buy button, and it'll pop up, create an order for us. So that's one way to do it. So I'll click on the buy just so you can see the order that it creates down here in the bottom. I'm going to delete it. And another way that many people use, they'll come over here to the trade tab. Now, the one thing I want to point out to you on the trade tab is there's quite a bit of a lot of information here. This particular stock does pay a dividend. How do I know? It shows me right here. It shows me what the yield is. 1.89% right now. It also shows, they pay the dividend quarterly. So if you're somebody that's looking for that type of information, pretty easy for us to find here. But what we're going to do is buy our purchase for our class account here. All right. You don't see a buy and sell button here on this screen like we did the previous screen, but when you buy something, you pay the asking price. So the asking price on this right now is $212. You just select on the ask price. It brings up this order. The default number of shares is 100. For our purposes, I went through and kind of did some risk management for us. We're only going to buy 40 shares of this today. We'll go ahead and we can take this price of $212, or we could try to change the price and try to get in at a different price, right? Maybe you're thinking, I want it to go down a little bit. I don't want to pay such a high price. Maybe you say, I only want to spend $210 on it and put it in as what we call a limit order. That's the limit of what you're willing to spend for it, okay? If the market doesn't go there, you might not get filled. You're more likely to get filled if you put something in closer to what the asking price is. Now, I'm going to flood that asking price back in by clicking on this little lock right here. It's black. And essentially, when it's closed, this price is fixed to whatever you set it to. If I click on the lock and it unhooks, right, lock goes open, then it floods in that current ask price of $212. We're just going to go in. We're going to go ahead and put it in for $212. I'm going to hit confirm and send. Read through the details. Sometimes this is where you find you made a mistake. Maybe you put an extra 0 on something that you didn't mean to. Okay, so check out the numbers as the order comes up here. And then our orders for our class, I am putting it in this little grouping called stock investing, getting started with stock investing. I'm going to send that out. The market's closed right now, but Monday morning, we would look for that order to get filled. It's just going to sit there and hopefully it'll fill as something close to better or better than $212. Now, as far as strategy, this goes back to Sabrina's question. It's a little bit beyond what we typically are going to talk about here, especially in this very beginning, getting oriented with things session. But if you wanted to, if you said, I think a nice run up in the price here is $230, could that be your strategy of exit? That you say, if it goes to 230, I get out. But if it folds back, if it pulls back here to say 203, I'm just pulling a number out of the air that's lower than the price of the stock. You could put it in to say if it hits the target, go there first, or if it goes down lower than where I think it's doing me any good, then I'm going to put a stop loss order to get me out of the trade. Now that price isn't necessarily going to be guaranteed to you, but what it'll do, it'll actually put out a market order that helps you get filled at the next available price. Let's see, can you get the order information to show the total of what the total cost of the order would be? That was on the screen that I said, hey, pay attention to this screen, right? When I hit confirm and send, this is where you see all of that information. Now, it defaulted 100 shares here. I had changed our order to 40. Okay, but then it does give you that information. Of course, it'll show any commissions and fees that might be applicable there as well. All right. I hope that's what you were asking. I hope I answered that question for you. All right, this was kind of just laying some platform, right? Some basics for today. Next week, we're going to move on to meatier topics. All right, we are going to look at, our topic is going to be what to buy. What kind of stocks should we consider? We're going to spend a great deal of time on that. Afterwards, I think you'll feel more comfortable about building a watch list of stocks that you can watch. And ideally, you'll want to paper trade them in your paper money account. Now, my time is up. I appreciate Lee answering questions here for us today. I appreciate all of you attending as well. Remember, this is a getting started class. We don't expect you to know too much. Planning to answer lots of your questions. This is just a little summary of what we looked at here today. And if you're at a point you want to practice, do so in your paper money account. We'll get more into that in our next session. All right, you guys have a great weekend. If you have any questions, put them down in the comments section. I'll go back and visit those and answer them for you as they come up. Thanks, everyone.